Awesome. Looks like we got Mark on now. So I'd like to introduce you guys to Mark Pellman. He is from the Accord Financial Group, and he was in the print industry for over 3 decades. So he understands how your guys' shops are running. He understands how the equipment is making you money, which we found is very beneficial for getting that lease approval. So I'll turn it over to you, Mark.
Can you hear me?
Yes, we can.
Okay. Well, we appreciate the opportunity and be welcomed by ScanDecor to do this. Do you have the video presentation ready?
Hello, folks. My name is Mark Pellman, and I'm a finance consultant at Accord Financial Group. I've been working in the printing industry before I came here for about 33 years, and I've been with Accord now going on 2 years. Accord was the finance company that I had used for North America beginning in 1996 when I was managing a worldwide sales network of equipment sales, utilizing independent dealers and different OEM accounts. I'm now on the financing side, obviously, adding my experience from the sales side to help customers like you obtain the best financing for your needs. So also here with me is the president of Accord Financial Group, Doug Richters. Doug?
Hi, I'm Doug. I'd like to thank ScanDecor for allowing us to speak to you today. I've been with Accord for 26 years, and I go back almost that long with Mark. I worked with some of his customers when he was selling equipment on their financing needs. So again, thank you for having us today.
So we know the equipment's good that you're looking at with ScanDecor and with the multiple things that they offer. And there can be multiple factors that help determine what's the best way to pay for this equipment, and that's why we're here. So equipment in these industries that ScanDecor serves can have different lifespans and can be tied to specific contract orders, or different factors will come into play here for each individual company. So what's the best way to pay? Well, cash. Cash is king. And some people always say that that's the best way. And we believe ScanDecor will still take checks and they'll take cash. And cash is quick and easy, and there are no finance charges with cash. But the downside is you're giving up a valuable resource, especially in today's unpredictable environment, but people will still say cash is king. Now there's second thing here is bank lines of credit or loans. And again, usually quick and easy if the lines are already established, but rates are usually low, but sometimes they are variable, so they may change. Now usually lines are renegotiated annually and can be called by the bank. Not really meant for financing equipment, but if you know you can pay it off soon, they may not be a bad option for you. Another thing that happens is sometimes people will use home equity loans or personal loans. And this is found mainly with new or very small businesses that often finance this way. It's best to avoid this option for obvious reasons from your personal growth. Equipment leases or loans through companies like Accord is one of the best ways to obtain your equipment in today's environment. Now, down payments are usually low and can be arranged quickly and easily, so it's a very popular form of financing. Believe it or not, 80% of all businesses lease some or all of their equipment, from very large Fortune 500 companies to small mom and pop companies are doing this. So some things to consider now when you're deciding how to pay. The big one is, what's your monthly budget? How much have I got to pay for this? So how much will this equipment save you or earn you over the next 3 to 5 years? Now, this is a good point of reference to compare to your monthly payment. So let's look at some actual applications for financing based on some of the recent deals Accord has done with ScanDecor solutions and equipment. The first one comes to mind here is we had a customer that wanted to grow their business, their printing business, by upgrading their booklet making equipment to be able to create stitched booklets starting with 24-inch paper size, and they wanted to make A4 landscape booklet production. Now this application uses the standard Horizon SPF FC200L stitcher, folder face trimmer, plus the VAC 1000 collator, is very popular in the market, and includes a landscape guide so that the operator can load the sheet length. Customer trades in the existing booklet maker equipment that he already has, and this got the amount that was financed down to about $122,000 US dollars, and using it on an EFA financing program. So in looking at that $122,000, we look at multiple terms that we can offer for financing. So at a 60-month term here, they were going to be making payments of $2,440 a month. If it was 48 months, it could be about $2,960 a month, or 36 months for about $3,800 a month. And this was with one payment up front. Another application, medium-sized printer, wanted to increase their perforating and creasing capabilities for business cards, greeting cards, and they needed some stop perforation capabilities. So the ScandiCore solution here was based on the customer buying the Graphic Wizard PT335 series with a cross perf assembly and strike perf attachment with 4 strike perfs. And the equipment cost was roughly $31,146 US dollars. There was no trade-in. And again, the most popular in this type of equipment is an EFA finance program. So for this one, at a 60-month term, it was roughly about $650 a month, or $22 a day. 48 months was $790. 36 months is like $1,022. And again, with one payment up front. Now, these numbers I'm quoting were based upon the credit of that particular customer. Your credit could vary, even make it lower or higher, depending on how things work out. So next question is, when do you think you will need to replace equipment that maybe you've got today? And this can help determine the term of the contract you need and the amount of what we call the residual on the back end. So will you want to keep the equipment after the contract is done? It's a key question. And if so, you might want to limit the residual or do an equipment finance agreement. Another thing you need to ask yourself is, how fast is your business growing? If very fast, you might want to keep your cash or your line of credits in reserve and use an equipment leasing company. Okay.
So Accord deals primarily with 2 different types of contracts. One is a true operating lease. With an operating lease, typically there's a residual at the end of the contract term, and that residual can be anywhere from 10 to 30% of the original cost of the equipment. At the end of the term, which is typically anywhere from 24 months to 72 months, the customer has a couple of options. One, they can pay the residual and own the equipment. They can continue to make payments on the residual, or they can turn the equipment back into us and walk away. The benefits of a true lease is that the payments are tax deductible. So at the end of the contract, at the end of the year, the customer can add up his rents, and that is what the expense will be. An alternative is an equipment finance agreement. Typically, there is no residual at the end of the term with an equipment finance agreement. The customer will own the equipment after the last payment. Primary benefit of an equipment finance agreement is that the customer can take advantage of Section 179. In 2020, a customer can acquire up to about $2.5 million worth of equipment and deduct that from their tax returns. So Section 179 is a very popular tool. We suggest discussing your options with your accountant. Every business is different. Every business has different tax returns, so it's always a good idea to get a recommendation from your accountant.
So how's this process work? And it's actually pretty simple. Typically, that all we need up front is a 1-page credit application for deals that in sizes of $150,000 or less in most cases. Over that, tax returns and financials may be required, and the turnaround is usually a day or 2. And in today's environment, DocuSign has really made it simple to complete the paperwork. So an entire transaction can be wrapped up within 1 to 4 days in most cases. Usually the first payment plus a documentation fee is all that's really required up front.
So what is some questions you might want to ask the equipment leasing company that you're working with? One of the things is their interim rent. Some leasing companies will charge a fee up front depending on the time they fund a transaction and the date of your first payment. And sometimes this fee can be pretty hefty. So you want to ask your consultant, whoever you're working with, is there interim rent? Another question you might want to ask is there an evergreen clause in the equipment? If you do a true lease, some of the contracts are written where if you do not tell the leasing company what your intent is within a certain period of time from the residual, they can keep billing you for rents. And we've seen where leasing companies have billed customers up to 2 and 3 additional years. So you want to ask about an evergreen clause, especially if you're doing a true lease. What are the upfront fees? Accord typically charges a documentation fee of anywhere from $150 to $350, depending on the size of the transaction. You also want to get this upfront, hopefully in writing from the company that you're working with. One thing you probably don't want to do is submit your application to multiple leasing companies. If you're a smaller business, typically the leasing company will pull your personal credit. So if you apply to multiple leasing companies, you're going to get your credit pulled, multiple times, which is not good for your credit score. Finally, we do business in Canada. We have some partners that we work with up there that handle the documentation and credit. So we would welcome all our Canadian customers to contact us if they need help with financing.
So now we've gone through this now, and we've given you the basics for getting the financing. Now give me a minute to pitch a little bit about Accord. And again, we've been here since 1992, and we'll equipment finance amounts from $5,000 to millions of dollars. We do flexible payment structures that can include deferred payment plans to allow you to get the equipment you need now and begin paying later. It's helpful if you've got a new contract with somebody where you're printing work that can help pay once the work is being billed to your customer, get that equipment in there, get that job started using deferred financing. And we have a friendly, devoted individual with our group here. You'll get an individual on the team to help you all the way through the process. There's no voicemail when you call Accord, and you have a partner for the life of the contract. So again, we've got a lot of years of experience since 1992. We've had thousands of commercial businesses have relied on Accord to finance or lease their equipment, and a very high percentage of our customers return to us to finance additional equipment. They come back to us because we're quick, easy, and simple, and very flexible. We do not think like bankers. And from my background, I'm not a banker. I come from your industry. And we are very small, family-owned business, just like many of our customers. So we think like you. So let us help finance the equipment that you need to grow today. And also here, again, thank you for the time. And now we're here to take your questions. Thank you very much.
Thank you.
Thanks for that, Mark. That was good. And yeah, we've had some good experiences with you guys for sure. But one question that we do have come up a lot, and maybe the audience would find interesting, explain a bit more about the interest rates and the lease rates, and what makes them go up and down, and what terms are available for the end user.
I'll let Doug answer that one.
Sure. Hi. Interest rates typically are not shown on the contract. What is on the contract is monthly payment. So that's usually what you'll see is the monthly payment. Now, obviously, there's a cost of funds, and that will change depending on the size of the transaction, the credit of the customer, and the term that is on the contract. So what you would expect would be anywhere from 5.5% to 7.5% cost of funds would equate to the interest rate that you would be paying. But we always recommend making sure that you ask that question now, Brian, because since there is no interest rate on the contract, leasing companies have a tendency to possibly give the wrong number, give the wrong interest rate. So you want to be careful to check the number and make sure you get the right rate of interest.
Mm-hmm.
Thank you. Yeah, it helps, and I'm sure that's of interest to the audience, but I think Andy was going to speak next. Yeah, so back in the video, Mark was talking about a situation on a booklet maker up here in Canada, actually. So typically we use a cord in the US. However, we use another company here in Canada normally, but I had one situation where I was struggling to get an approval. So I reached out to Mark, which was the first time we had done so in Canada. And very quickly, he had an approval for me. And I'm sure that the reason he got an approval over two others that I tried in Canada here is because of his knowledge in the printing industry. He was able to look at his books and say, okay, maybe they don't look great on paper. And yes, we're in a pandemic, everything else. But I can see why he wants this machine, because it's going to open up the doors to the future. You know, he had a customer, he wanted to hold out this product, you know, whether that's a landscape booklet or whatever, which would add business to his existing business that he would not have got otherwise. So with Mark's 32 plus years in the industry, he was able to see that and use that as a leverage to get an approval. So thank you, Mark.
You're welcome. You're welcome. So hope we can get some more done for, because I also have good friends at Standard Horizon as well. They're a good company too. Yeah, and part of that too is when we look at this with some of these folks in the printing industry, especially at this time of the year, something else I want to raise here is sometimes we take a look, if the credit qualifies, we look at deferred payments or touch payments. So let's say they know they've got a contract coming in and they'll have the money to start making the payments later. Let's get that equipment on the floor and let the upcoming contract start paying for that equipment. So we have some plans, if the customer qualifies, where they can make deferred payments or touch payments up front and then let that contract start paying for the equipment. And I've seen that in the printing industry in the last few years. It's been very important. Another part of that too is the time of year we're in the United States. A lot of people don't always think about Section 179 and the benefits. And Doug alluded to that in the presentation. They don't understand sometimes, or just don't think about the depreciation or how they can get the tax credit and take advantage of that for their business to conserve some more cash. So this is something else we can help with when the deal comes up, and we'll be glad to do that. You have any more questions?
Got a quick one here, Mark. Get asked by clients quite a bit. Is there going to be any penalty or extra fees associated with the early payout before the term ends? What can you say as to that?
Good question.
Sure, I can take that one as well. If it's a true lease, usually if you want to pay it off early, you're going to pay the sum of the remaining payments. And that's the way all equipment leases, true leases, are written. An equipment finance agreement is a little bit easier. Usually if you're going to pay it off early, the remaining payments are discounted back. So you can save money by paying it off early. It's not like a mortgage, however, where when you pay it off, you're simply going to pay the principal. What they do on an equipment finance agreement is discount the remaining payments back. So while you're saving some interest fees, there still is a little bit attached there. So we really try to find that out up front from the customer and pick the right contract that fit them. If they know they're going to want to pay it off early, we can usually adjust the term and we'll more likely go the equipment finance agreement route.
Thanks for that, Doug and Mark. I think that clarifies a lot. Appreciate it.
We got another question come in here from the audience. It says, my company has 3 owners. All of us have different percentages of ownership. Do you need to check the credit on all of us? Or, sorry, let's read the question here, on all of us if one of us has over 50% ownership?
And typically on that one, we would have to check the ownership on everyone. It just depends on definitely the guy that has 50%. If somebody has a real small percentage in the company, then depending on the funder, we may not need to do a pull on their credit for a small percentage of ownership. But we always have to take a look at the full credit of the company and their ability to pay. So typically that would be all the owners, unless they're a real small percentage.
Unless it's a very large company where, there's, 50 owners possibly, and they've been in business quite a long time. In that case, often we don't have to pull any owner's credit. We'll just go off the credit of the business. So it's usually the smaller company or maybe the newer companies that will pull personal credit on.
And there's sometimes they want to do what's called corp only, and then that's a whole nother avenue we can go and pull off the corporation.
Doug, got a question for you. Earlier in the presentation, you mentioned about a clause so that lease companies don't keep issuing you taking payments. What was that clause called that you referred to?
Called an Evergreen clause. It's usually in the small print of the contract, and our industry really has cleaned that up quite a bit. So, but there are still companies out there that if there's a residual, and it could be a 10% residual or a 30% residual, but they request in writing, and it's usually about 30 days before that residual comes due as to what the intent is. So if the leasing company does not receive a letter, they'll just continue billing the monthly payments past beyond what that residual is. So there's extra fees that can mount. So Accord, we will send a letter to the customer and usually call the customer in that period of time and say, hey, you got to get your intent in to us on this. But we do not charge Evergreen. It's just something to be aware of if you do a true equipment lease.
No, that's good. I'm glad you pointed it up, because I had a customer one time. It was a large business, and the finance department had this invoice that just kept happening every month, and it never raised a red flag. And the payment just kept happening and happening. And when they did realize, they were very upset. But at that point, what do you do? So, yeah. No, thanks for pointing that out.
It's the larger companies that they expect to keep paying because it just becomes automatic and there's no one really looking at that payment.
Yeah.
Another question we have here is on prepayments or deposits. When a piece of equipment is being purchased, often there's a deposit requirement, yet the client wants to do a lease, and the installation or delivery of the piece of equipment may be delayed by several months due to the manufacturing process. Can you speak about pre-funding on a lease?
We can accommodate that. What we will include with the contracts to the customer is what we call a pre-funding agreement. And basically it says, we understand that you do not have the equipment right now, but it's okay to go ahead and pay the vendor for the equipment today. So we need to get the customer on board to do that, because the contract will kick in at that point. As soon as the funds go out, we would start billing the customer, and this next payment would be due in about 30 days, unless we do a deferred contract where the first payment usually won't be due for 90 days. But the customer has to say it's okay to do that, and as long as they do, we can pay up to 100% of the cost of the equipment, including installation and shipping to the equipment dealer. So we do those all the time, and usually never have a problem with those. Customers usually understand the equipment dealer needs to get paid something up front.
Yeah, and then it has to be passed on to the manufacturer, of course, which is the world that I come from. So normally they're looking for anywhere from 40% and up, so they can have the money to start purchasing the materials. There are some cases where we'll have the customer put in X% to make sure that they've got skin in the game up front too, especially if it's special built equipment. But then we do our best to work with them to whatever the manufacturer had on the quote through the dealer to get that pre-funding. We can do that.
Great, thanks for that.
Any other
questions?
You briefly touched on about deferred payments. Accord offers on a traditional lease, even if we are delivering the piece of equipment immediately, you guys offer a deferred lease program where the end user may not have to start their lease for several months after they've already received the equipment. Is that right?
Correct. And we have multiple plans that we tailor to the customer. So, for example, some people think of 90-day deferred financing. Sometimes that'll be one payment up front. Sometimes it's no payment up front. Sometimes there'll be touch payments for 3 months. We even have some programs that go out as much as 180 days. But I'm very careful to say about those programs that people's credit has to qualify to get that advantage out there. But if you're a well-established company with good credit and you're trying to preserve cash, we can do the deferred payments to help, especially in this COVID-19 environment. We're seeing that as a good option to offer folks to keep their business going so they keep cash, so they can, one, keep their payroll going, but also keep putting the equipment that they need.
No, that's very good, Mark. And so many clients want to, you might say, get the new product pushed out into the marketplace, get the cash flowing. This is a great opportunity for that, isn't it? Getting revenue from the new piece of equipment or automation, and then start with that palatable monthly payment long after their cash flow is started from that device. That's great.
Yeah, well, or the player may be farming out a job right now to get a certain process done, say a post-press process. Let's say they're farming out to get laminating done for work, and maybe it would make sense for them to go ahead and bring that process in-house with deferred payments. In the United States, you have tax with Section 179 before the end of the year with that equipment, and they should talk to their accountant that maybe it might make sense to do that. Save some money on those jobs, bring it back in-house, and get the equipment.
Very good. Thanks for that. And, one of our clients in the crowd was asking for your information, so Joe will ensure that you get Mark and Doug's information at Accord. Their information also is available on the Expo Pass site, but Joe, we will make sure that we get that info through to you.
Okay.
What can you, Mark, what can you tell us about early payoffs? I've run into it before where our customers, they're getting near to the end of their lease and they want to just pay it off. Is there any penalties, or how does that normally work?
Well, as Doug said earlier, normally it's whatever the balance is that's left for the agreement that has to be paid off. What we see out here with a lot of funding sources, and sometimes we are a funding source ourselves, depending on the location, the type of equipment. There have been programs out there that, depending on the customer and the equipment, that there can be discounts for early payoff, but I'm very hesitant to say that there's a cookie cutter program to do that in this environment. We have to look at the customer's credit, the type of equipment, because if you look at, say, a copier versus a piece of post-press equipment, they're viewed differently in the funding world, because a piece of post-press equipment, like a folder or a guillotine cutter, those will last for 20, 30, 40 years out in the marketplace, and there's very little change in that technology versus a copier or an inkjet printer. The life cycle there may be 3 years or maybe a little bit more, and then people want to turn those in and get something different. So that would change the early payoff provisions. So we'd want to know that equipment up front, negotiate best we can for the customer, and see what we can do. But in all cases, there's always a provision where you can pay it off early. It's just you may or may not have the opportunity to get a discount to do that, depending on the equipment and your credit.
That's excellent, Mark. I think our history goes back a few years, like we've already mentioned before, back in the old bomb folder days. And I think you traveled the road up here in traveled the roads in Canada and all across the U.S. You know the industry extremely well. Extremely, very grateful to have you as a resource for ScanDecor. We often look at you as an additional salesperson for our team. You help us make those sales happen. You understand the equipment extremely well, and you understand the industry. So thank you, and thank you for taking the time, yourself and Doug, coming out here to join us today.
You're quite welcome. We
Thank you,
appreciate the
guys.
opportunity.
Thank you
And
very much.
let us know how we can help.
Perfect.